Alright guys, today I want to talk about why is all the Forex and the stock market on autopilot and how that can help us trading. I found this article on CNBC. 80% of the stock market is now on autopilot. Passive investments control about 60% of the equity assets, while quantitative funds, those relying on trend following models instead of fundamental research, now account for only 20% of the market share according to estimates from JP Morgan. So this is great news for us traders, which means trading becomes more accurate. So when we scroll down, we can actually see how algorithmic models have gained popularity on Wall Street. Low-cost passive vehicles keep raking in assets from Main Street. Passive funds have attracted 39 billion of inflows so far this year, whereas active funds have lost a whopping $90 billion in 2019. So we can clearly see that more and more money goes into passive investments. And those ones are controlled by the algos or the computers with automatic execution and stop losses. So everything is on autopilot. There's no brokers, there's no trading desk. The analysts, they're down to bare minimum. So that's going to make trading a lot easier for us. Let's take a look at here. This article from Mordor Intelligence. Algorithmic trading is now accounted for 60 to 73% of the overall, so it's about very close. That's what it. Check this out. It says, based on trillion of simulated trading scenarios, Sentience algorithms use scenarios to identify and blend successful trading patterns and diverse new strategies. Not only does it reduce human labor, but it also allows for optimum accuracy. So how they do it? I don't know, I'm not a scientist or a programmer. Algorithmic trading, also known as algos, is a virtual part of 5.1 trillion a day global FX market. It accounts for up to 1/5 of all the trading and about 70% of all orders placed on multi-dealer currency platform EBS. And then you have Forbes. Our deep learning algorithms have identified several ETFs. QA's deep learning algorithms have identified several ETFs and looking out for the next week, and so on and so on. So everything is just going artificial intelligence. So this is all great news for us traders because trading is becoming more and more accurate, and I'll show you what I mean by this. I'm on Euro Pound daily chart. I'm a price action trader, so I mainly use price action and highs and lows, and I use support and resistance as a guide. The indicators, they're just like a guide. They work and they don't work. So what's the point? Waste of time and, just cluttering your chart with all kinds of different lines and so on that work and don't work. And it's just too much confusion. Keep it simple, stupid. That's the way to go. So here we can't really see, is the trend up or down? We got uptrend here. We got higher highs. We got, what do we got? Lower lows here. So let's take a look on a weekly chart and see where we're at. Weekly chart seems like a bit of a sideways movement, so let's go on to a monthly to see what we're getting. That's very similar. But what sticks out here is these two here. That's the range that we are currently in, so we need to trade something within that range. Considering that we are here in the sideways movement, we want to make sure that we are here. Let's mark it up. Do we have lower low? Yeah, you could say that's a lower low. Do we have lower highs here? Yeah, we can certainly say that we have lower highs as well. And here we have actually lower lows too. So look, we are on a weekly chart. I prefer to trade on a daily chart, so let's take a look at a daily and see what did we mark up roughly. So as you can imagine or think, we probably want to take a short trade because we got on our daily chart, obviously, because we have lower highs and lower lows. So we need to find support and resistance to work off. As you can see here, this one also worked. So then we think that this one might also work, and this one is actually a support here that's been broken. Then it acts as a resistance. Then we have a nice new low. So now to simplify the whole thing, I'll show you how I usually mark my charts. It's a very primitive technology. but that's about that. So then you have like that. So this is the sideways movement. That doesn't give us much information. But then here we have the new low. So this area is where I'm gonna be interested to going short once the market comes back up. Never ever chase the market. So we're gonna place a short trade. Let's see what we can do. So a short trade. So when the market comes back up, always give it a little bit of room here. And then roughly we wanna take profits around these levels. Never ever go all the way down, because he may just come back against you and go back to where it's even like that. All right, so that will give us maybe risk to reward 1 to 6.6 risk to reward ratio. So when the market comes here, we're going to place a pending order to sell when the market hits around this point. Our stop loss is about here, so if it goes slightly above, we're cool, we're good, we're still going to stay in the trade. Let's double check the setup again. So we got higher lows, we got higher highs, whatever that is in between there. What is that? Yeah, that's a higher low. Sorry, lower high. Not a lower high, fair enough. So let's zoom in and take a look what really happened. Nothing here, nothing here. A new lower low. Let's see how we're gonna get filled. Nothing there. Yeah, we got filled here, and then as you can see, our order was triggered here. Our order was triggered here. Our stop loss is still way above there, which is great. We got plenty of room to work with. Now let's see what happened after that. It's going good so far, not so much. Yep, we're going. Yeah, that's it. Going a bit against us. Oh, that's not good. So now this is where most of the people panic. They say, oh my god, I'm gonna get stopped out again, I'm gonna lose money again. No, you don't do that. You don't move the stop loss to break even. You don't freak out. You just watch day by day what happens and just set it and forget it. There we go. We just got our profits, which is 1 to 6.6. There's your trade. 6.6, not bad at all, huh? All right, so there will be your one risk to reward 6 to 6. So risk to reward 1 to 6.6 equals winner. Okay, make it a little bit bigger. 24 and green, maybe. That's a good one. All right, let's clean this up a little bit. So we could technically take the trade here to go long and probably put a take profit all the way up here, but this is a weekly chart. And let's get back to our daily chart. So here I would like to take a long trade, maybe probably as we are currently where we are. Take a long trade, put a stop loss slightly below there, as we would, and take profit all the way, not all the way to the top. What do we have here? 127.75. Not bad, not bad at all. So on a daily chart. So I would like to take a long trade here, put my stop loss below this low, and enter here as is. And we're not gonna be greedy. We're just gonna go up to here, and assuming we already took the trade, let's see what happened afterwards. So we have an update straight away. That's good news. Oh, you see? Now, this is what I'm saying. If we were to put our stop loss too tight, we will probably get stopped out. Let's see. Yeah, we have an update. That's good. Not so much of an update. Yeah, it's going slowly. Oh, that's it. Wow, look at that. So this was pretty unexpected. So in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, which is probably like 2 weeks, we got our risk to reward 1 to 7.3. Not a bad result. So RR 1 to 7.3 equals winner. So overall 1 to 6.6, 1 to 7.3, that's 7, 13, 1 to 14. So if you were to risk say $100, you would make $1,400. Not a bad thing to do if you know obviously what you're doing and if you're patient. So let's take a look what happened afterwards. Where did they end up going? Is he gonna come back or is he not gonna come back? Whoa, man, this seems like it was meant to be a really strong long trade. That's awesome. Anyway, we took our money. So the conclusion is double tops, double bottoms always work if you have significant tops and if you have significant bottoms. So that's the only time they really do work. Stuff like this here, not so sure. Okay, so this is all like whipsaw, just moving around. As soon as you get significant tops, that's your higher highs, and you get significant bottoms, then you can trade. Alright guys, so that's all for me for today. I hope you enjoyed the video. If you did, please smash the like button. Don't forget to comment. I would appreciate your comments. If you're new to the channel, please subscribe and tick that bell so you never miss a new video. Thanks for watching and enjoy your life. Bye bye.